Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome to ETMarkets CryptoConclave. I'm Meloni Bhatt. Is Bitcoin an experiment still? Many argue that it has no income, no practical uses, and extremely high volatility. Is it a good store of value, a worthy investable asset? What is the bigger promise of the broader crypto ecosystem that provides for investors? Should crypto be taken seriously as an asset class? Now, to shed light on these and more questions like these, I have with me Joel John, who is the principal at LedgerPrime. LedgerPrime is a multi-strategy fund. Joel handles DeFi, managing the portfolio of over 60 entities in the space. Joel, thank you very much for your time.
Thanks for having me on, Meloni.
With Joel, we have Avinash Shekhar. He's the CEO of ZebPay, a crypto exchange. Avinash is a chartered accountant by training, and his experience stretches across retail, telecom, and luxury goods. Welcome, both of you. Avinash, my first question to you. A good asset class is one that has most of these traits. It is liquid, it is stable, has value, there's a low transaction cost. Do you see crypto as having the attributes to be a good asset class?
So in fact, actually, crypto and especially Bitcoin, if you see, have all these attributes and more. I think one of the biggest attribute of an asset class is that it should hold value across space and time. And when we're talking about time, we're not talking about 1 or 2 months, we're talking about years. So I think what we are experiencing in crypto space is nothing less than like a once in like a century kind of opportunity. And whenever you look at any asset class which is like in its early stages, okay, you always see volatility. Volatility is a part of the growth. I mean, when share market started, I mean, I was just looking at Google price actually, 2007, 2008. It went down by 63% over a period of 1 year. You look at oil price last few months, you look at any Facebook price, for example. So I think volatility is a part and parcel of any growing asset class, and especially short-term volatility. But what you have to see is that over a long-term period, whether it holds value or not, which I think crypto does. And second is that whether it is solving any use case or not. And it's like, I think, a very big myth that crypto doesn't solve any use case, or it is just people trading for the sake of trading. I think that's, the idea of speculation. That is, I think, very, very far off from this truth. And that actually indicates that how little, or I mean, how early we still are in crypto space, where we really don't understand, or a large number of people don't understand that crypto has a very, very legitimate use case. And in fact, that use case may be bigger than internet. And we are at a very, very early stage of that revolution.
All right. Avinash, what you're saying that it could probably be the newness of the asset class, so to speak. Would you also say that it's the lack of a controlling agency that is leading to this kind of massive volatility?
So actually, the lack of controlling agency is a feature of crypto. It's not a bug. And that's actually what defines, because what you have right now is all centralized. I mean, not only like in finance space, any space you look at, social media, you look at any space you look at, you have centralized agencies who are controlling things. And what Bitcoin is trying to solve, the crypto is trying to solve, is that can we do the same thing better in a decentralized manner, where the users are the in a way owner of that ecosystem, where the users define what should be there, what should not be there, rather than a single centralized agency, which is a single point of failure. And that control brings, obviously, if you have too much of power, then that power can be abused. Okay, which if you have a decentralized system, truly decentralized system, then even if that system becomes too big, the chances of abusing that power is very, very less as compared to a centralized system. And that is what crypto is trying to solve for. So in a way, you can say that lack of centralized agency is a feature. Another thing for volatility, if you look at the point is that crypto is a 24/7 market. Okay, it works on Saturday, it works on Sunday. There is no circuit breakers. Okay, and it's new. Okay, people still, as you said, they're not aware of what problem it is going to solve, and so that means a large number of people come for speculation, and that is all recipe of volatility. But my belief is that over a period of time, this volatility will go down. Any new asset class sees this volatility, and the volatility has actually gone down. If you look at last 5-7 years, it has gone down, and it will continue to go down. That's my belief.
All right. Joel, any thoughts on this?
I think I'll just demarcate it by 3 points, right? Like, one is, I wouldn't say that there is no regulation. There is self-regulation of markets that always exists. So let me explain what that means. 2017, if you want to be a fair critic, you can always say that, hey, there was an abuse of the ICO markets. But within a year, you could see that interest in ICOs kind of dwindled rapidly. 2021, you could say that, hey, there was this whole NFT boom, but by now you can more or less see that the market's focus has been on very few NFT instruments. So what I would say is that lack of regulation is not really a thing. The market's self-regulated, and we've already seen it. The second thing is, I would say that the markets are actually way more regulated than we would perceive it to be in India. It's because I work with a regulated entity out of the US. I understand the kind of requirements we have to be functioning. So, everything from where we store our crypto to how it is audited on a daily basis. There are very clear mandates for that. So maybe, even in Dubai, there are very clear mandates on how this can be traded. So at this point in 2022, to call crypto an unregulated market is really far-fetched, because much of the world has actually had clear regulations on how to do it. And third, I think this is what Avinash was saying, is that because it's an early stage asset, and the ways of finding out how to really evaluate it is still up in the air. There can be pockets where massive speculation comes in, and then the market comes back to rationality. But in my observation since 2013, I would say there have been these micro phases where the market goes to absolute craziness, but the market comes back to rationality very, very fast. And actually, I can say that the period of irrationality is dwindling every few years or so, right? But that's because as the number of people knowing about this asset class and the awareness increases, the space within which you can actually pull off nonsense is reduced, which is great. Yeah, so just some pointers there.
But see, the idea that crypto fuels volatility, and it also fuels the idea of it as a speculation-driven product. It means the investment value isn't very grounded. It makes its price incredibly sensitive to even slight changes in investors' expectations or perceptions.
Right. So I think on the speculation side, I would, again, this is not in defense of crypto, right? Like I'll get to the bad sides too in a bit. But for context, every technological revolution has had its share of speculation. Right from when shipping routes were discovered to there was a railway bubble, there was a cycle bubble, there was a dot-com bubble, and now that in this last few years, there's been a crypto bubble of sorts. I think what really happens is people are willing to run others in terms of taking risk because they think that the value will keep going high. Second is, in markets like India, where access to high risk instruments are highly regulated, people find crypto as a way of both entertainment and likely making life-changing sums of money, right? And the third I would say is, if you take Bitcoin, like just Bitcoin, I would say that its volatility, if you study from a theoretical point of view, has begun imitating emerging markets currencies or stocks to a large extent. I'm not saying most of crypto is doing that, at least Bitcoin's reached that point of maturity. Now, why is there so much speculation? I think it's three things. One is, I think there is a rampant need for financial literacy across emerging markets. There's no discounting the fact that at least some proponents of the market find crypto as a way to gamble, all of that. There's no denying it. But the solution for that is not crypto, it's also doubling down on financial literacy. Two is actually what the government's done in India is already barring it to a certain extent. Like the on-ramps, like, ZebPays and the Coin-D6 of the world already have information on how much money is really coming into the system. If they want to say, okay, this person's put in too much and we want to just give them a notification saying, hey, maybe don't overtrade today. That is a possibility. In fact, it already happens on platforms like Binance. If you trade past a point, they tell you, maybe you should take a break. And third is, what do you say? I think everybody's searching for economic opportunities. The internet's brought our markets closer, but it's only the upper skill starter that's still earning from a San Francisco or the rest, right? Somebody that's just trying to make an extra penny, for him, crypto is just like that lottery ticket. But sometimes what happens is that it's also on-ramping him to the broader financial ecosystem. It's also on-ramping him to understanding savings. Now, I'm not going to sit here and say, hey, crypto is a solution for all of this. I'm saying maybe we should have a broader conversation on financial literacy and regulating markets itself. Right? That's what I'm saying.
I think that's a fair point. But Joel, just to kind of stretch it a little bit, we see within the crypto ecosystem that a few people, early investors, those who are already rich, they are the ones who are holding the large amount of crypto. Would you say that there is a risk of the market prices crashing if these people were to liquidate holdings and therefore underpinning the market volatility?
So I think there's three sides to it. One is, have the early adopters made money? So I got into crypto when it was around $200. I had to sell all of my crypto to fund my college education. So in fact, I didn't make any money because crypto went up. I did make money because I was in the industry and there was this skill upskilling that happened. But what I've observed from early adopters that came in and held on crypto while it went up 100 times is that they have the risk appetite to really hold it, right? Like for them, selling that really did not mean much because the moment they sell it, they need another asset class to go on and put that money. Now, if you ask me this question in 2016, hey, if somebody comes and sells $100 million of Bitcoin, but the market collapsed, I would say that yes, it may slightly reflect in a few percentage points. Again, for Bitcoin, there was liquidity. Now, a $100 million order is not a problem. I feel like the market does absorb. Where the problem really lies is if broader retail sentiment changes and you have a few $1 billion of sales happening in a single hour, like even a single day, the market can absorb right now. That is when you see massive liquidations coming. So what are these events? Last December, you saw this Omicron news coming out. If you pull out the charts, you'll see that the market instantly dwindled. But if you overlap the S&P 500 chart with that, you'll see that it's more or less correlated at that point. It's not just crypto that's doing that thing.
It's all other asset classes as well, is what you're saying.
Yes. So what I'm trying to get at is, yes, crypto is volatile. Okay, let's start with that. It is volatile because for a large extent, it has a high amount of retail participation, which is very sentiment-driven, right? If you take how volatility in the stock markets have evolved, it's also been in proportion to the number of retail participants in it. If I take Paytm stock and I showed you how it's performed, I can tell you that, hey, there's a high amount of retail participation in this. Again, back to your question, can the markets absorb large sell pressure? For certain asset classes, it can. For Bitcoin, it definitely can. If you're talking about very smaller early stage tokens, no, it will go around 60%, right? There are certain days where the liquidity for crypto does, I wouldn't say vanish, but it declines in India. So the days where the market feels like the RBI is going to ban crypto. There are two cases where Tether went down 9-10%. Bitcoin was trading, again, lower than global markets, right? Yes, those days it will. But you take just 24 or 48 hour spans from them, and you see the market is literally recovering back to global parity. And what's usually happening is institutional sources of capital come in and absorb at that point in time, because for them, it's a buying opportunity, right? Now, with the recent regulations in India, I feel the markets are going to be even more efficient because people are not wondering, hey, am I going to the jail if I buy Bitcoin? They're wondering, is this a buying opportunity or not? I'm not saying every dip is a buying opportunity. I'm saying the market's perception of the asset has changed.
Crypto came for the purpose of creating a peer-to-peer electronic cash system. I mean, that was the underlying idea. Today, the scenario is very, very different. Some people invest in crypto seeking quick short-term gain. Others are coming up with new decentralized use cases of blockchain technology. Do you think that this is enough to classify crypto as an asset class?
So, to 2-3 points here. I think obviously crypto is a emerging asset class. Okay. And crypto again, it's like it's like internet. You can't, it's very difficult to classify it is like a one same thing. Okay. You have one hand, you have Bitcoin, you have another, which is like a store of value. Another, you have Ethereum network, which is like a network where you can build app, and there are new things coming up. And every part of this crypto ecosystem has a maturity cycle. Okay. Bitcoin is, and Ethereum is at a certain level right now. The new coins or the new things which are coming up, they have to walk that path. Most of them will fail, or a large number of them will fail, but a large number of them will succeed also. So what we are seeing is that what we are building is an infrastructure technology right now. Okay. On which there are many things which will be built, and I believe it has a great future in terms of a asset class which is like going to be very big. At the same time, you will also see applications which are built on, for example, as we talk about decentralized network. So let's say decentralized social media. Okay. If you look at decentralized social media, that itself is, it can solve lots of problems, and it can be a solution which is better than the current centralized social media which we have, because I think it gives power to the users rather than a one centralized agency which can, based on whatever opinions it has, can basically remove people or censor people. Okay. So all those keys, what I believe is that there are many things which we even don't know what will come up in terms of what new use cases will come up tomorrow, because it's the infrastructure level layer which we are building right now. So yes, I think crypto is a great asset class. Another point actually I want to cover is that people buying only for speculation. Okay. Obviously there are people who are buying for speculation, but this Bitcoin as an asset class is not built on people who are just buying on speculation. I mean, I know people who have bought at $100, $200 and never sold in their life. They believe in the idea of it, because the thing is that, I mean, I always give this example. If you've invested $1,000 in a share and the share goes down to $500, there is a likelihood that you will sell, but there is also a likelihood that you will not sell and say that, okay, the price will go up at some point of time. Let's put it, let's say 60%, that 60% chance you will sell, or 50% you will sell. But if that share price goes from $1,000 to $5,000, what is the probability that you will sell and not hold? I think there is 80-90% probability that people say that, okay, we have made too much money and let's move out. So imagine the people who have holding Bitcoin from $100 to 20,000 to back to 3,500 to 67,000 and now to 40,000. So it requires a different level of conviction, and I don't think those people are going to sell at $100,000 or $200,000, because those people believe in this technology. They believe that this is something very big, and I don't think a large number of people selling at any point of time.
But Avinash, don't you think that those would be, a very tiny sliver or a small percentage of the entire, of the whole numbers that are actually holding Bitcoin?
So in terms of percentage, maybe, I mean, obviously in any asset class you see, there is always 80-20. Okay. 20% of the people hold 80% of that asset class, which is not very different in crypto. But Bitcoin is more decentralized, more, I think. Another thing, if you see, is that who invested in Google first? Did retail investor get to invest in Google? The answer is no. Bitcoin is the only asset class, I think, where the retail investors came first, and then now the institutions and corporates are coming. So I think in terms of, if we compare it with any other class, it's much more broad-based.
All right. Okay. That's interesting. We'll come back to 1 or 2 points of that a little later. Joel, this is what critics generally say, that in a traditional economic system, currencies are backed by government, gold is backed by rarity, stocks are backed by organizations who are working to make a profit. And and the critics will question, what is crypto really backed by?
So I think, okay, what is crypto really backed by? I think I'll keep that as the main question, but I'll just give you some context before we go there, right? I think, yes, general currencies are backed by governments, but it comes with centralization risks. Like what we've seen in Russia, currency just went up 50%. In India, we had demonetization where the government just said, even if you hold the physical notes, it's of no use. Stocks, yes, they are backed by profits, but actually you can also say that they are backed by the idea that at some point in time, this firm could likely be profitable. So again, if you take some of the entities in India's stock markets, you'll see that some of them don't make any profits, and you can argue that, hey, this is just hot air. Now let's come back to crypto. I think one of the ongoing theories that I've had is that society evolves as the forms of communication and currency it has evolves. So let's say shipping routes came around, and that's right around when stock markets took off, right? 1800s, 1900s, Telegram took off, and for the first time you had digital remittance, not in the form that we see in PayPal, but somebody from London could wire money to somebody in India using a Telegram. That's how Western Union took off. Then PayPal came and e-commerce took off. And I think what happened with crypto is basically you have a system of money that is backed by algorithms that is digital in nature, which was required because the broader human society has gone digital. So something like Bitcoin, for instance, it is backed by the number of miners that are involved in securing the network. It is backed by the fact that it has digital scarcity that is verifiable, and it is backed by the fact that it's not easily it can't be confiscated from you easily. Now each of these have different ways of accruing value to a person, right? So why does an asset not being confiscatable have value? Something like what's going on in Ukraine right now, or something like what's going to happen in India with demonetization will explain why assets that can't be taken away from you will have value in the long run, right? There's always going to be a subset of society that requires an asset like that. Why does digital scarcity matter? I think if you really notice what's going on with space, at some point in time, maybe in the next 50 years or so, we'll start mining gold from other planets. Maybe not in the next 50 years, because if you take 1960 to 2022, the evolution in space as a market has not been that drastic. We went to the moon in the 60s. We've not really gone much farther yet. But at some point in time, we're going to have more gold than we have in planet Earth. So the idea that gold is scarce on its own is likely not entirely true. The way that human society is likely responding to it is through saying, okay, here's this asset which will have a fixed supply that is going to be enforced through miners and computation that's on the network, and it can't be changed by a single person. And that's why it has value. And the third is that over the course of time, the amount of dollar requirement to mine per Bitcoin has also gone up. So the way that, at least in 2016, some models used to think is it costs X dollars to mine a Bitcoin, and there is going to be a Y dollar premium on top of it, because of all these other features of being non-confiscatable, of being movable, of being digitally scarce. And from time to time, you can actually see that there is a premium between the dollar cost of mining a Bitcoin and the actual price of a Bitcoin. So some models actually say the higher the premium, the more likelihood that you are in a speculatory bubble. But these are the fundamentals that give it value. Now, with other tokens, like let's say Ethereum, with let's say Filecoin and the like, there are different ways of seeing how do you evaluate it, and I think that goes beyond the scope of this conversation. But what critics or skeptics don't realize is that our forms of currency are evolving with what society needs, and Bitcoin just falls in that broader picture right now on a global consensus basis. Is that all nonsensical? Yes, you can say that, hey, that's all nonsense. Give me something legitimate. So then my answer would be, hey, why is the IMF or regional governments actually exploring something like a central bank issued digital currency? It's because there is a requirement for money to go digital, and obviously there are pitfalls as money goes digital. For instance, if all the money is digital and it's controlled by the government, they can just kick you out of the monetary system at any point in time. And again, as we've seen in different democracies and governments around the world, citizens require an alternative currency system from time to time. And that's the gap that Bitcoin solves for now.
All right. A few questions linked to that. The idea of decentralization, all of that. We get to it. Avinash, when we classify cryptocurrencies as an asset class, where does that leave something like a DeFi, NFT, dApps, other blockchain products?
Yeah. So actually, I said that crypto has many parts. Okay. For example, when we talk about, let's say, DeFi, decentralized finance. So what is decentralized? It's basically is a way to transact. Okay. And for doing that transaction, you still need crypto. Okay. So crypto and DeFi, for example, even let's say we talk about non-fungible tokens. Okay. Again, you need a token. It's again a form of token. So basically what is happening, and especially similarly, let's say Bitcoin as a decentralized network. So you need a Bitcoin as a token, and you need an infrastructure which it supports. So the Bitcoin or the token, or let's call it crypto, and all these infrastructure projects which are coming, they go hand in hand. They are like you can't have one without the other, basically. So if let's say you have Compound as a network, and they have their own token called Compound token. So when you work in a decentralized manner where you need to incentivize the people who are securing the network, okay, then you can't have one without the other. You have to have Compound token, and you have to have that Compound decentralized network where you can lend and borrow crypto, basically. So I think it's a part of the same ecosystem. They are not different.
Okay. So if crypto as currency is an asset class, then DeFi, NFTs, dApps, other blockchain products, you also categorize that within the asset class?
Yeah. So actually, as I said, that currency is, let's say, and
a use
obviously
case.
Currency is a use case, and obviously using the term currency is obviously in Indian context, we call it crypto assets actually. So currency is only one use case. Okay. Another use case, let's say, for example, is you need to do lending and borrowing. Okay. Lending and borrowing of may not be Bitcoin, it can be other. So if let's say we call Bitcoin as a currency, Ethereum is not a currency because that's not for the purpose of it. So, and there is another token. So you can have different use cases of those tokens, which can be currency or anything else. But as an ecosystem, you can say that, okay, they are different part of the ecosystem. As a decentralized network, there are different applications of that network. Like, for example, in internet, you can do many things, but everything you can't club as internet.
Thanks to both of you, Joel John and Avinash Shekhar. I think we still need to remember that crypto is unregulated, and this impacts the ability of more regulated entities to engage with it and within it. The other major concern is fraud, both in terms of storage and bad activity on the blockchain. Joel pointed out to it. Environmental concerns are also big challenges to crypto. How this ecosystem manages and navigates all this and so many other issues of price volatility we spoke of, that will benefit all and not just a few, I think will determine its path. Thanks very much, Avinash and Joel.
Thank you.
Thanks, Joel.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.